sessions, daily cycle, and session liquidity, and how you can trade them. Okay, so there are three main sessions, which is Asian session, London session, and New York session. Okay, Asian session is basically a range in the market. London and Kilzone session, London and New York session usually swap the most liquidity that is present in the market. Okay, so there is some timing written on the screen. You can take a screenshot of it. So ICT have like refined London session to London kill zone, which is 2 a.m. to 5 a.m. and New York kill zone to 7 a.m. to 10 a.m. Okay, so first of all, you wanna time zone and you will have to change this to New York UTC -5. Okay, so when you change this is where you will this is what the time you will get. Okay, so for the daily cycle, let me show you something. Let's say you have an Asian session, which usually is opens at 19 till midnight 00. Okay, Asian session usually comes with like a range in the market. Asian session is also known as liquidity. Okay, so this is your Asian low. Okay, this is your Asian high. So after Asian session, there is Frankfurt Open, which is usually 2 a.m. Central Time. Okay, there's gonna be another video only like based on Frankfurt. So because Frankfurt have many other concepts too, so I cannot explain it in one video. So let's say after Asian session, the daily cycle works like it's gonna swap either Asian high uh, at like 2 a.m. during London kill zone. It's gonna either swap the Asian low or Asian high and then moves towards the opposite direction. Okay, in this scenario, let's go with Asian low. Okay, when London opens, it swaps the liquidity and then it's gonna go towards the Asian high. Okay, now let's say this from here to here was your London kill zone. Okay, after London kill zone there is New York kill zone, which is 7 to 10. Okay, so what's gonna happen in New York kill zone is the price gonna like reverse a bit and take uh, the high that by London kill zone. Okay, let's say it swept the high, and where is gonna be your the target, the load that was made during London session. Okay, so this is how price delivers every day in the market. So let's say you have Asian session, you have Asian low, you have Asian highs. Okay, in this scenario, price breaks through the Asian highs first. It's gonna go to like Asian lows during the London kill zone, and during New York kill zone, it's gonna like take this New York the London low, and it's got the possible target would be the London high during 2 to 5 a.m. Okay, let me show this to you on chart. This is Euro USD, and these are the two indicators which I use. This is what I will prefer to you. You can take the screenshot of this. Okay, be sure you put the time zone to GMT -5 because you have UTC -5 here, so this is necessary. So Asian session, this is the timing. London session, this is the timing. New York session, this is the timing. Make sure you change the colors of each of them. This is custom labels. One of them is PDH, means previous day high, which is liquidity obviously. You're gonna take the label to high. Okay, custom range, this is what you're gonna type there. The second custom level is PDL, which is previous day low, which is also liquidity. You're gonna put low. Okay, after this you have 8:30 open. 8:30 open happens during London kill zone. Okay, so let me show you how it works. Take the screenshot of this. Okay, so let's say you have London kill zone, and the 8:30 price open was somewhere over here. Okay, so in order for the price to move towards the upside, it's gonna go below the 8:30 open, and then it's gonna go towards the upside. Okay, in other scenario, let's say you have a selling trend and your 8:30 open was somewhere over here. Okay, so the price is gonna go above, like either it's gonna touch the 8:30 line, or it's gonna go above the 8:30 line, and then it's gonna drop. So like if you are looking for sells, look the sells above 8:30 line. If you are looking for buys, look for the 8:30 line. I will show this to you on charts. Like in this scenario, I'm not backtesting this. This is the live chart from today, 1 December. Okay, so let me show you something. This is as simple as it could be. Okay, so you see this candle was 8:30. Watch here. Okay, this whole big momentum candle, because 8:30 open brings the liquidity in the market, like the void in the market. 8:30 is when price clears the major highs or major lows. Let me. So this was the 8:30 time. So this is where the market, the price of this candle. Okay, so with this indicator, it's gonna mark itself. So you don't have to do it manually. Let me mark it for clear. So you see, after this open, price moves upward and then exactly taps into the 8:30 line and then moves upward. So this is, it works every day, every pair. Okay, so go to 15 minute. So if you see over here, this was the Asian session which started at 19 to 00. Okay, so during Asian session we had like a range, right? So let me go somewhere over here and to drop the 1 minute time frame. Actually, let me hide this one. And so you see, this was the Asian session high. Okay, when price clears this, you will wait for the market structure shift and fair value gaps. Okay, as I shared my entry criteria, right? So let's scenario, we had this buy side swept over here. Okay, this was the buy side swept, and we did not have a major market structure shift. One was over here. Let me make it market structure shift, and this was the fair value gap, right? Let me change the color. This was the fair value gap. Let's say you took a loss over here. Okay, now after this price cleared this buy side liquidity at this point, you can, okay, so after this trade, what you would be waiting for is a market structure shift. You had a market structure shift over here. Okay, you had a this was a market structure shift. Okay, what you're gonna wait for is another fair value gap to be appeared on chart so you can trade it. So this was the fair value gap. Your entry would be, now there are multiple types to enter this trade. Now either you're gonna take the Fibonacci tool from the top to the bottom. Okay, now you enter on 0.50 level. If your fair value gap is like this big, so you can take the entry on 0.50 level, and your stop loss gonna be go above somewhere over here. Okay, so in this scenario, there is another thing you can do is you're gonna take the the only fair value gap candle. Okay, so your entry is gonna go at this 0.50 level of the fair value gap candle. Okay, so this is where my entry would be, and my stop loss is gonna be, if you go with the fair value gap candle, so somewhere around up there. Okay, so now you want to ask me where should be my first target. Your first target is always gonna be the Asian session. If we swept the Asian low, your first target would be Asian high. If we swept the Asian high, your first target is gonna be the Asian low. Okay, now in this scenario, let's say you took off the 70% partials from this trade, and you hold this trade until you see market. Okay, now after this, let me close the back testing. Let me clear this. Okay, now you had the sell. Okay, so this was the last low that price made. So as I said in Telegram, every highs and every lows have liquidity above and below them, right? So this was the last low that price in this scenario made. So this is gonna be your full take profit at this point. Okay, during you will be doing is you're gonna go to now watch this. You have Asian low. Okay, as I said in the as I described in the daily cycle, the Asian highs are swept over here. The Asian, now what you're gonna do, you're gonna wait for the market structure shift again, and wait for the fair value gap to be appeared, so you can trade the fair value gap, and your target is gonna be the London session high, or the previous day low, or previous day highs, or any high that was made during the market. So at this particular time we have two, right? One of them is that the Asian low was swept, and one of them is this liquidity was swept. Okay, so if you move to like 15 minute, we kind of have a fair value gap somewhere over here. I saw it on, like, when I was trading it. So let's say you waited for this fair value gap, and you are constantly waiting over here for a market structure shift. So where do you see the market structure shift? Now one of the guy in the Telegram was confused shift, right? So there are multiple types of people or mentors that like market structure shift varies of how they understand it. So some of them is gonna take this as a market structure shift. Let me this has the market structure shift. So some of them is gonna take this as a market structure shift, or some of them is gonna take this you see this bearish candle in after this bullish candle. Okay, because let's say price made lower low, lower high, lower low, lower high, lower low, and lower high, and after that it like fails to continue moving to make the new low. So it happened over here, like failed to make the low, and it the next candle break the candle of the lower high. So this is gonna be another market structure shift. So I hope this clears how you take the market structure shift. If you don't understand, I will make another, like a single particular video. So after this market structure shift, what do you see? Take the Fibonacci tool, take it from the bottom. Now as Christopher or ICT shares, ICT in order to take the entry, ICT Fibonacci tool from body to body. like you use Fibonacci from this week to week, this week ICT use it from this body to this body of the candle. Okay, so after we have a fair value gap below the 0.50 level. Okay, as I shared in the last night video down. So this was the fair value gap, like a clean fair value gap that you can trade off. Now multiple types to enter. ICT suggests if you don't have fair value gaps in the entry, okay, you can trade this 0.79 is and 0.708 level. This is my Fibonacci levels. You can take screenshot. So ICD suggests if you don't have fair value gaps and you have market structure shift, you can trade this OTE. This 0.79 to 0.708 level is known as OTE, optimal trade entry level. Okay, so this is optimal trade entry level. So if there was not any fair value gap present at this point, you can take the entry at 0.79. So many other mentors have changed this name and call it CLS entry. So as you may have seen it in my previous stories. So this is your entry gonna be, and this, as I said, if your fair value gap or your stop loss going too big, so you can refine it to the bottom of the wick of the candle that have fair value gap in it. So as I said, where is your first target gonna be? The London session high. This was a 14-hour trade, so this is the only trade you can take and you can like move off the market just in one trade. Do remember we have one sell over here, we have one sell over, that was a -1 hour, that was a 7 to 8 hour trade, and after this 8-hour trade you have this 14-hour trade, and after this 14-hour trade let me show you something more. This video is going to be very wide. Okay, so let me go through somewhere over here. Let me hide this. This so this is where you see the market structure shift. Okay, this was the first this was the rate after the London session highs swept. Okay, this was the first market structure shift. It was actually not a market structure shift, but it was a equal lows. So if you see equal lows in place of market structure shift, you can take it as a market structure shift, because this is liquidity and price is gonna go to clear it. Okay, so this is your fair value gap. So if I didn't teach about BPR. So what BPR actually is, when you have fair value gap on buy side, on sell side, and as on the same time you have fair value gap on the buy side as well. So in this particular scenario, so like this, I am gonna refine it to somewhere over here, because you see you have the actually my bad, I'm gonna take it from here, because this was the buy side candle. Okay, this was the buy side fair value gap, this wick to this wick. Okay, this was the sell side fair value gap from this wick to this wick. So the area between these two gaps is known as BPR, balanced price range. BPR have more conflicts than fair value gap. If you see BPR in place of fair value gap, you can trade double the risk. Okay, so this is where your entry gonna be, this is where your stop loss would be, this high. Let's say it goes to like let me do it, it went for almost 2.80, let's say 2.5 hour. Okay, now either some of you would have gone with break even, or let's say you took a loss over here after 8 hour, after 14 hour and one loss, we had another loss over here. Now one of the guy was confused at this breakout structure. I don't know, but if you go to like lower time frames, even lower than 1 minute, like 30-second time frame, this point was a breakout structure. But for me, is on 1 minute time frame, this is not a breakout structure. If you consider this as a breakout structure, this could have been the breakout structure as well, because it swept the liquidity and this is the breakout structure. But no, this is not the breakout structure. Breakout structure should be as clear as this. Okay, so buy side swept. Okay, and we have the liquidity, we have the market structure shift. Okay, after this market structure shift, what do you wanna wait for? We have to wait for the fair value gap. So this was, okay, in the market, the lower wick of the previous candle, the higher wick of the next candle, the gap between this is called fair value gap. Do remember, if you I have a gap over here, I could drag it there and this would be called as BPR, or balanced price range. So this is where my short entry would be. And now it depends on you. If you have like tight spreads, this would have been like a clear entry. That won't be a problem if you have like tight spreads. If you manage your spreads on your stop losses, let's say you go, okay, where should be your target? You want to find a low that had liquidity. So this was the last equal lows that I see. You see that we made on like 1 minute time frame. This was the last equal lows that we made at this time. So this is where our target should be. Like not the target, but you would have taken like 70% off at this point. All right. So after this, we have this liquidity swept. What we gonna do after this liquidity swept? This was a liquidity swept, right? So this is where I shared this entry on Telegram. You may have known. So this is fair value gap, right? So if you see and zoom it closely, you have the gap candle on the left hand side of it. So it automatically becomes the BPR, balanced price range. You can write it somewhere, or I will share the abbreviations on in the Telegram. So this was your, I guess, fifth entry. This was your stop loss, and where is your target gonna be? This high, because this high have liquidity above them. We will be, as we know, we are in like a selling trend. So this high was the liquidity. This was 3R. Okay, we will continue at last. Okay, after this we have this high swept, we have this fair value gap with a market structure shift. Now either you're gonna take this market structure shift, or we will take this as a market structure shift. We have absolutely no problems, because this was valid and this was valid too. So this was the trade that I have shared on my in my Telegram too. So where is gonna your target gonna be? This is how easy it is to ping pong your trades. You see, we have a sell, we have a buy, we have a sell, and just right after that sell, we have this bullish fair value gap. Okay, so you see, right after this sell, this is our fair value bullish fair value gap. Your stop loss is gonna be go below this low, and your target is gonna go below. Like for me, I would have traded this, because this is 10R and I usually aim for 10R only. So after 10R you can do this, or you can go above as you want. So I didn't took this trade. I was not sure on this, but this on the charts as well. So this is the all from the day. So I can show you some more entries if you want. So this is where the fair value gaps were, right? So if you drag it to somewhere over here, you are not gonna directly trade put the entry over here. You will be waiting for the lower time frame confluence. So this was your fair value gap, right? On after the main fair value gap, you have another fair value gap, and this fair value gap broke the structure over here. So remember, we have the first fair value gap, we have the market structure shift, we have the second fair value gap, and we have the some sort of inducement. I don't usually trade inducement, but this is what where inducement is. So after this, your stop loss is gonna be above the fair value gap candle, right? It's gonna be your targets. This low, this was the last low that price made. Okay, it exactly tags into it and then booms. And now this could have been your another entry, or you can have another trade at this point because price exactly tags into it and drops. Now calculate these. How many RR could we have got? 5.7, like take it as a 5. Okay, we have a 5, we have 12, we have 8, we have 3, we have 6 or 7. Okay, we have 14 R. Now do remember something very important. Just in the morning I shared that this was my ideal price. I was waiting for this to be reddit because if you see the last day video I shared on my Telegram group, this was the sell side liquidity that we cleared tomorrow, and this was the buy entry. So if you had this buy is holding from tomorrow, now I don't know, it's gone. The entry was on 1 minute time frames, so it would have been very low stop loss. So let's say you have a buy somewhere over here, and your target would have been this buy side liquidity. As I said, every high and every low have liquidity above them. Now there is like some of the guy was asking that if what is valid buy side or valid sell side. There is not any concept at ICD dot that there is invalid buy side or invalid sell side, because this was the high, this was the buy side, so this was the low. Now this low currently is the liquidity below it. So after this buy side run, I am waiting for the price to move below and go below this. So if it's not gonna do this will go to somewhere above the previous highs, and it's gonna raid the previous high, and it's gonna drop, and this was the high, oh this was the low. Maybe it could be go below this and then go back towards in the uptrend. Okay, so you see how price moves. Like we took the sell side liquidity, we get in, like the first one was over here during the New York session. I actually had this entry and I shared this whole breakdown in the video tomorrow, at yesterday's videos. So this was the buy side liquidity, we cleared it. We had 1 minute entry, this was our sell side liquidity, this was our target. After this swept of sell side liquidity, what's going to be our target? This buy side liquidity. Now after this buy side liquidity, what's going to be our target? Either this low, or if this low is going to be our target only if we find sell entries at this particular areas. So let me share one. So this was the entry that we took, 14-hour entry that we took. Let me read this one. This was the entry that we took on during the London session after the London kill zone swept the Asian lows and this previous liquidity, right? So this is gonna be your first take profit and your full take profit, which was 22 hour. So if you go to now lower time frame, you have you had 8 hour over here, you had 3 losses. No, you have 2 losses. Okay, so one was over here, one was over here. So let's say this is this as a 20 hour, because you minus the two losses, you have 20 hour. you have 6 hour, you have 3 hour, you have 12, and there is 8 hour, and this is 5.75. so I hope this clears your perspective of how I trade and how you can ping pong this market. This is a very wide video and I will have to take a time to spend it.